Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a huge welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. One thing that we've loved about learning to invest is that these big structural changes that we're seeing happen in the world around us, investing in the stock market gives us a chance to, I guess, benefit financially from those changes. And we are joined by an expert investor today who is going to take us through how we can approach investing in these big mega trends happening in the world around us. Elisa DeMarco, welcome to Equity Mates.
Well, thank you very much. It's great to be here with you guys again.
So Elisa is investment director at Magellan Financial Group, and a massive thanks to Magellan for their ongoing support of Equity Mates to help us keep our content free. So today's episode will be defining what megatrends are, but then digging into three big megatrends that are shaping the future: health spending, semiconductors, and digital innovation in the financial sector. A lot to unpack there.
There is a lot.
Yes. So Alyssa, let's start with megatrends that will define the next decade and defining what a megatrend is. So can you perhaps put a definition to it, and then what separates a trend from a megatrend?
Yeah, trends are typically shorter lived. It could be a particular cycle or a fad that is driving what we might call a trend. So the fashion cycle is often one that does that. And when I was thinking about how to describe things today, I don't know why, what popped straight into my head was like hypercolor from the 90s, right? Showing my age a little bit here. But like that is just that shorter term kind of trend. It didn't last for very long, thankfully. We're not seeing people walk around with handprints of tie-dye on their chest anymore. But COVID was another good example of kind of what led to many kind of smaller trends. So when we were all kind of locked up at home, there kind of was that spike in buying goods online and that kind of real acceleration of e-commerce. When we then borders opened, travel then was that pent up demand, that shift to services. That was that shorter kind of lived trend. Now when we're thinking about a mega trend, as you can imagine, just kind of that on steroids really, and it's something that's lasting a lot longer. And for something to be a mega trend, it is typically going to be changing a behavior, changing the way we live, or changing a process. What's a really good example of that is smartphones. Do you guys remember when the first smartphone came out?
I remember, I clearly remember the first iPhone.
We were in high school, and I remember my first phone was a pre-smartphone phone. Yeah. Played Snake on it, all of that. But yeah, it changed everything. Well, it changed everything, I guess, over time. You didn't really realize from the first smartphone how different everything was.
Yeah, I remember seeing my mate in class with his, and it just blew me away. Yeah. But I didn't invest in Apple at the time.
I know. That's the thing. I know. It was literally staring us in the face. Like we were literally looking at it every day.
Yeah. Didn't do anything.
Yeah. No, so that like Apple kind of revolutionized, kind of almost putting a computer in our pocket really is what it is now. And that was back in 2007. So getting close to that kind of 20-year mark, and global penetration is at around 70% of smartphones. So that's kind of a really good example of a mega trend. So it's a trend that is going to kind of push through economic cycles. You can grow up multiples of GDP for 10, 20, 30, sometimes even 40 years. So it's a really exciting concept to be thinking about as an investor when you can get above GDP growth for decades.
Now, the Apple one is great because there's a very clear correlation between the mega trend and then the company that you can invest in.
Yep.
And a big thing that we want to talk about today is for some of these mega trends, the companies that are the best investments out of it. Because
absolutely.
Not everything is clean as smartphones and Apples.
No.
but before we get to that, Bryce signposted them before, the three mega trends that we're going to talk about today. But can you just give them, I guess, a little bit more detail and explain why they are some of the biggest or most important, or maybe just most investable megatrends of our time?
Yeah, so we picked three to talk about today. There are probably kind of 5 to 10 really exciting ones that we do invest behind at Magellan. But the reason why we went with those three is because they're all quite different. They have different risk profiles, and that they're also at different points in their megatrend life cycle, which is also really important as an investor, because it kind of gives you that view on the duration and the opportunity that you have within a megatrend. So the first one that we'll talk to is that rise in healthcare spend. We've had a lot of visibility over this for quite some time. We're all getting older and able to live longer and more fruitful lives, and so that leads to that increase in healthcare spend. Semiconductors, super interesting. They're powering those other megatrends that I kind of alluded to that we invest behind. So it's the technology behind semiconductors that is enabling AI, cloud computing, electric vehicles, autonomous vehicles, like super exciting stuff, making all of our lives easier. And then the final one on digital innovation in the financial sector. These are products that we're all using on an everyday basis that were more tangible to us perhaps in a cloud computing. And their cash digitization is one of the key trends. It's already had kind of 20 years of the tailwind, but there's still another 10 plus years to go. And then there's other aspects of our digital lives, like digital wallets, mortgages, that can increasingly be digitized, which is improving productivity, reducing costs, making our lives easier.
Nice.
So one of the more common ways for people starting their investing journey, a lot of the Equity Mates community, to invest in megatrends is to go straight for the ETF that gives sort of broad exposure. How do you approach investing in megatrends, and why is Magellan's view still to look for those quality individual companies rather than take that broad-based exposure approach?
The opportunities to invest are so broad now, which is wonderful. But I suppose just kind of stepping into that like thematic ETF as an example, and what it is that you're getting, and then kind of talk through the Magellan process. So we mentioned healthcare at the beginning as one of the tailwinds. Now there's over 200 companies within the healthcare space. So if you're investing in a thematic ETF, you might be getting that whole basket, or maybe a subset on a particular sub-industry within healthcare. Now that means that you're going to be getting the winners, the companies that are doing well, but then also those that are potentially ceding share to those winners. And a long-term stat for a typical index is that the median company does underperform. So what you want to be doing is be on the right side of that, to be getting those long-term structural winners that are growing really strong. And that's really what Magellan is focused on through our investment philosophy on picking quality companies. It's identifying the companies that are more likely to be the winners and steer away from those losing companies, those that are losing shares. So when we're thinking about a quality company, it's really fun. We're looking for companies that have competitive advantages. So what do we mean by that? Does it have a strong brand? Does it have scale advantages, network effects, barriers to entry? Is there intellectual property advantages that a company has? Why that's really important when you have those attributes is it means that you're able to take share from others, you're able to grow faster than your peers, which in investing world is tops. If you can grow better than others, you're more likely to be achieving those attractive returns over the long term. Now, let's bring together quality and a megatrend. So if you've got a company that can grow faster than peers, that is amazing. And if you can do that behind a megatrend where you're growing at multiples of GDP, you're creating a really attractive growth algorithm here, where a company can be growing at 10 to 12% per year for a decade or more. That compounding is just really wonderful and something that investors really benefit from.
Love that. Well, let's get into these three megatrends, and we'll talk about some specific companies as we go. So let's start with rising health spending. And to start with, can you just help us understand how large the megatrend is? What are some of the numbers that really illustrate how the world's changing here?
Yeah, so we're up to about 17% of US GDP that is healthcare spending, and it is growing above GDP. This is not something that's just popped up overnight. This has been a long time coming, and as we'll talk to, there's still an incredible pathway going forward. Now, in terms of what's been driving that, you've had healthcare innovation has been really key to enabling us to live longer, wealth effects, and then we're also a little bit less healthy than we used to be. So just some more stats around that. So in terms of living longer, largely driven by innovation. So in the US, about 18% of people are currently aged over 65. By 2050, that's going up to 25%.
Wow.
Then in countries like Japan, by 2050, you're looking at around 50% of the population. So it's quite stark, that kind of aging population. There's two reasons. One was that medical innovation that I mentioned. You've had incredible success with vaccines, with drug development, with improved safety, for example, in the maternity wards. And then people are also having less kids. So that then adds a lot of cost, really, because when you're aged over 65, the stats is that the cost of healthcare is about 3 times more than it would be for those less than 65. So big kind of spending pathway coming through. Also mentioned wealth effects. As we get wealthier, we typically devote more of our spending towards healthcare, which is helping us live longer as well. And then on the third part, which is kind of counter a little bit to the last two, is that we are living longer, but we're getting progressively unhealthier. So we're eating more than we need to. We're sitting more than we should, and so that then is just creating this kind of range of additional healthcare burdens, be it from obesity or mental health, that is just pushing that cost level up. So lots of catalysts. But the healthcare industry, so it's that defensive part of the portfolio as well.
Here's a stat that I saw recently that just blew my mind. The US is now at 74% of adults are overweight or obese.
Yep.
GLP-1 baby.
Yeah, I know.
Yeah.
So I guess the question then becomes, within healthcare as a sector, where are these trends pushing the money? Like, are there particular subsectors or industries that are benefiting?
Yeah, so we typically kind of would broaden the investment bucket into 2 categories. So one is on your treatment space, and then the other is the infrastructure space. So the treatment space is the really exciting one that kind of touches on, Ren, what you just spoke to then. And so within the treatment space, it's really the investment, it's funneled into those addressable markets that are larger. So obesity's been one where you've seen a lot of R&D go into, and that's from exactly what you've said in terms of just the proportion of the population. So in the US, well over 50% of people could be classified as obese, over 1 billion people worldwide. Like, that's a huge addressable market. And so that's why we've then seen that identifying of the semaglutide, GLP-1s, and that you're able to address that risk within society. You've also seen a lot of innovation come through on the surgical side, and so this is through robotic surgery, which is then improving patient outcomes on the table, improving the surgeon experience, the speed of the surgery, and then also your recovery time. So that's been a really interesting space, which we can kind of unpack a little bit more. And then the final bit, that healthcare infrastructure space. So it's a little bit more of your defensive side of the healthcare play here. This is investing in your private hospitals, in health insurers, in value-based care. So there's different risk profiles, risks and opportunities between these 2 buckets that we just spoke about. In that drug development, you are taking on a lot more scientific risk. GLP-1s didn't just pop up overnight. This was kind of 30 years in the making of R&D, initially to address diabetes, and then finding the alternate use cases with respect to weight loss. But all in all, it's more of a defensive part of your kind of portfolio when you're investing, but you can grow above GDP with that megatrend kind of tailwind, which is really exciting.
Well, what are some of the companies that are interesting you at the moment within this megatrend?
Yeah, so I think we'll leave the GLP-1s to one side. I feel like everyone's
heard. I want to hear about them.
heard a lot about Novo and Lilly, which, again, those high-quality names that benefit from the megatrend. But a company that
Are you interested in either of those?
Yes. Yeah.
Nice.
Yeah, they're really great kind of companies with respect to then the pipeline that's following on and the opportunities for these drugs over time, and then the alternate use cases for them. So there'll be trials, I believe they're starting probably this year now, on treating alcoholism through GLP-1 as well. So like there's a lot of different use cases that they're still proving out, plus looking at the different dosages and the different forms that you could potentially be using them for. And as you mentioned, the addressable market, really large. So there's a lot of opportunity for those businesses, and it's that intellectual property that they have that just they've got that first mover advantage, which is really beneficial when you're looking at quality companies.
So you were trying to move off GLP-1 drugs. Bryce dragged you back, but what other healthcare names are interesting?
Have you heard of a company called Stryker before?
Stryker? No. Stryker Translations is listed on the
Yeah, I
ASX,
was
but
gonna
I
say,
don't think that's what you're talking about.
No, definitely not. So Stryker's one that we'd call this quality company that benefits from this megatrend in healthcare spending, but has defensive earnings. So it's got a really nice mix to it. Stryker is a US medical device company that specializes in orthopedics. So they're industry leaders in their field. They touch about 150 million patients every year in over 75 countries. So they're not new at this. They're really experienced. But why is it that we really like Stryker? What makes their earnings defensible, and how can they keep growing off this base? So the key with Stryker is that history of innovation that they have. They've continued to enhance their knee and hip implant designs over many, many years. And in addition to that, they now have robotic surgery tools that then enable the surgeon to achieve those better patient outcomes. It's with greater precision, and patients are typically up walking within 24 hours after some serious surgery. So with that innovation track record and that superior technology, they have a first mover advantage. Over 60% of knees in the US are done with Stryker, over 30% of hips are done with Stryker, and they're like pushing out around the world as well. And you can imagine that once the surgeon's comfortable with a treatment, it's very effective, it is best in class, they keep using it, you get this flywheel coming through that it's really hard for a peer to come in, especially when the peer isn't quite, they don't match the technology that Stryker has. So we're always watching that kind of peer space, and is there something that could disrupt this leading position that Stryker has? But I suppose just putting some numbers around it, they're able to grow their revenues at around 10% per year, earnings at 12% per year. Now, given that that quality that we just mentioned, that they've got this first mover advantage, they're embedded within the hospitals, we see that they're able to continue to do that for 10 plus years, plus your aging population, plus that shift to robotic from non-robotic surgery, essentially just using your hands to do the surgery. That is a really nice kind of playbook that you've got there for defensive growth. And so that's one that we're really excited about at the moment, because it's giving you growth, but with lower the market risk.
Nice.
Love that.
Yeah.
Well, that's just one of 3 megatrends. So we'll make a note of Stryker Corp, spelt with a Y, not an I,
Yes,
if people are playing along at home. But we'll move to semiconductors, which has certainly been the buzziest part of the market for the last, 18 to 24 months. But, the trend has had a lot longer building up before the recent history. So give us a snapshot of, I guess, what the numbers tell us. How big is this mega trend, and potentially how big could it be?
Yeah, no, it's a great place, and I love the framing that you just did, because semiconductor is something that's gotten a lot of attention, but the current market is about 600 billion, which is enormous, and they predict that by 2030 we're going to get to $1 trillion. Yeah. Okay, so that's kind of a 10% per annum growth in that semiconductor space. And I think as time has gone on, when we think about semiconductors, they're kind of like the new oil. It's in every kind of product that we use. They're essential for modern society. If you look around your house and your everyday, semis are in everything basically that we're using. They're in your smartphones, they're in the car, they're in your kettle, right? So it's proliferated around the world. And I think that kind of importance of semis, you really saw that during COVID, when we had this kind of backlog in buying a new car, for example, and a lot of that was driven by semis because of the supply chain issues. And it's all throughout your car. Like, you can't sell the car without the semiconductors because it determines, like, it's the airbag is based on that. So these are essential products that are powering our everyday lives, powering the megatrends that we've been talking about. But on the flip side, because it's the new oil, you can see that the geopolitics is really getting involved, increasingly politicized between the US and China.
So the last couple of years, we've seen incredible hype around this mega trend, and even what some of the big tech companies are suggesting they're going to be investing this year alone is pretty incredible.
It is.
So are we too late to this mega trend? How do you think? Where do you see us in the long-term cycle here? No,
definitely not too late. As I just mentioned, like, we expect that kind of at least 10% growth per year, and there are parts of the industry that'll be growing faster than that. But what's really key is it's the advancements in semis are enabling advancements in technology. Yeah. So a lot of the improvements in our smartphones, what we've seen in AI, is all driven by that kind of advancement in semiconductors. So it's a really incredible opportunity that we still see in front of us. When we look at data centers, that's really kind of one of the key growth drivers for semiconductors, really powered by AI. But it's just the full suite of what you're using the data center for. It's moving from kind of files in your office, putting them on the data center, organizing that data so that you can then use AI and use those models to help productivity. So it's an incredible growth trajectory that we're seeing there. And then one thing we haven't talked about is in vehicles, for example. So the internal combustion car has about $600 of semiconductors in it. An EV has double that. Then autonomous is well on top of that again, because what's enabling that car to drive with us kind of in the back watching Netflix perhaps, is you've got sensors, you've got radars, you've got camera, you've got software that is doing it all for us. So the semis is what's going to be powering that next kind of step change in technology, which is really exciting. And semis are critical for modern society. And so we've got multiple megatrends that we've just kind of spoken about that's driving it. But then it's also, well, what's next? 3 years ago, we weren't talking about kind of AI as much. Well, it's always talking about it, but never to the degree that we have now. They'll enable the next kind of wave of technology as well.
Yeah. It's funny, semiconductors, when we started investing, and like that wasn't that long ago, in the 2010s, semiconductors were a cyclical industry, and that was sort of the narrative around semiconductors.
Yeah.
But really, it's now structural growth is the story.
Yeah,
and is
definitely.
that just a story of how much demand has increased over the past few years?
Yeah, so it's how much demand's increased, but then also I'd say the diversification of where the demand is coming from. Just kind of mentioned that kind of it's an essential for society. You're always going to have your smartphone. You might not replace it as often depending on the economic cycle, but there'll always be demand coming from that. The same for your car. Then as a workplace, you're going to always need the cloud. So there's this kind of essential need that is going to be backing the demand profile for semis going forward, where previously they definitely did have a lot more of a kind of consumption cycle attached to it.
Yeah. So let's get to some names. Now, I assume it's not going to be NVIDIA.
No, I promise.
So what are some of the names that you think are interesting ways to play the semiconductor trend?
Yeah, absolutely. So two of the names that we really like are ASML. So that's a monopoly provider in the equipment that's essential for manufacturing semiconductors. And then also TSMC, that's a customer of ASML that is the leader in manufacturing of leading edge semiconductor chips. So both are really interesting, but I might just touch on TSMC today. I'm not sure if the audience has heard a lot about it before, but it's a incredibly interesting company.
I'm sure people listening have heard of both companies, ASML with their lithography machines and then TSMC actually making the semiconductors. But why don't you give us a bit of description around it, but where you think why you think that's the most interesting way to play this trend.
Yeah, no, absolutely. So for background, for those that don't know, TSMC is a global foundry. So they basically manufacture semiconductors, and they are best in market, which means now that they are a virtual monopoly in the manufacturing of these leading edge chips, which is what's demanded, especially from your AI clients. So they're really uniquely positioned to benefit from the tailwinds that we've been talking about already. And like a fun fact is your Mag 7 companies, they're all customers of TSMC. So they're able to do what they do because TSMC is there in the background, continually innovating and developing these leading edge chips. So why is it that we like TSMC? What makes it quality that it can continue to protect and grow its earnings? I personally, and I think many do, take for granted how difficult it is to build a chip, right? We just go and buy our phone, but there's decades of innovation behind that. And peers continue to kind of to fall back. And TSMC they're ahead of peers in terms of their manufacturing capabilities. So I suppose just to put context on why it is so tough to make a chip. So a single chip can have 100 layers on it. It can take 4 months to go from designing to manufacturing it. It's that atomic level precision that's needed. So that's part incredibly tough. Then the other part that's really challenging is to continue to innovate, to be the leader so that you can continue to capture that growth into the future. So it's an incredibly challenging space, and TSMC are the best at it. They continue to invest behind R&D, building their fabs to be the leader to service their clients. The other part that is key here is the barriers to entry. So one of these fabs costs $20 billion, right?
Crazy.
A huge amount of money, but it's not just the money, it's the 4 years. It's the thousands of people, skilled people required to to build this, to build the fab, and then to run the fab, which is one of the things where really TSMC has been stepping ahead of peers. It's their ability to build the chips and have that high yield production, which is then enabling to get those scale advantages and the higher returns than all of their peers. So because of that cost, you can imagine these factories have to be running kind of 24/7, 365 days a year. It's really tough, and they are the best at what they do.
Yeah.
Love it. Well, we've got one more to go, Elisa, and that is the digital innovation in the financial sector.
Yes.
So can you help us understand just how large this megatrend is, and maybe give us some insight into what's going on?
Yeah, so it's a very broad trend, as you can see, with the whole financial sector, and there's many examples within that. So we mentioned at the beginning the cash digitization trend and the digitization of commerce. Only about 70% of transactions are digitized of consumer transactions, have been digitized. Now, I know coming from Australia, we're all a bit kind of, oh no, like I don't carry cash. What does cash look like anymore? We tap everything. But in countries like Germany, Spain, Italy, Japan, Mexico, plus EM, they are well behind the way that we are engaging with digital transactions. So there's still around well over $1 trillion that hasn't been digitized, and this just takes time to eventuate. Like we're talking another kind of 10 plus years that we're going to see that innovation continue to play out. And what's interesting with this tailwind is that it has been going on for a long time, but you still have kind of that 10 plus years to go of this mega trend. Other areas that we're seeing the digitization of is wallets. We now are increasingly using a digital wallet. About 15% of in-person transactions are using a digital wallet. The rest we're still using our cards, so there's a big runway to go there. Outside of payments, you've got the likes of mortgages. In a market like the US, there's kind of 10,000 financial institutions. So when you're refinancing your loan, there's a lot more complexity in doing that because of the scale of the industry. So some of the stats are that it costs about $8,000 for a financial institution to originate a loan, and a lot of that is personnel costs. So you've got the likes of Intercontinental Exchange that are working to digitize that entire chain. So another really exciting space. You've got digital ID, You've got data and analytics, and it's using data to then improve personalization, the offers and loyalty that you're seeing in your phone. All of this is that digitization of the financial sector, which is kind of, there's several reasons that why they're doing it. One, it makes your life easier, but it also improves your connection with your financial institution when you're getting an offer that you like. You're like, oh, yeah, I'm going to use that they know me, and it makes your life easier, helping the brands.
Gets us to spend more money.
Yes, well, that too.
Yeah, also makes it easier to invest, so
Yes.
maybe helps us build wealth as well.
True.
Yeah.
True.
But I think, like everyone is this mega trend is probably the most tangible of the three in terms of like the amount of touch points we've all had with financial institutions on a day-to-day basis, and even in our lifetimes, how much that has changed from, walking into a branch to branches no longer existing, and doing things paper-based to all being on your phone now. And I think if we think about that mega trend, there's no doubt we all see it and feel it and have experienced
absolutely.
it. But within that mega trend, the companies that have been the winners are constantly changing. It just feels like there's been wave after wave of disruption based on different platforms, from desktops to phones and different winners there, but also just like different businesses coming and going. So how do you take this big mega trend that's driving all this change and then actually find the true long-term structural winners as opposed to those that are just waiting to be disrupted by the next leg of change?
No, it's a great question, and something that we spend a heap of time thinking about, because to that point we're making in healthcare on kind of where investment money goes, it's where those large TAMs are, those large addressable markets. And as you mentioned, like financials touches everybody. And so there's been a lot of investment, and particularly kind of into that payments space. And so when we step back and think, well, how do we look at kind of a new innovation and then make the assessment of, well, is this a trend, or is this perhaps that mega trend that is longer lasting? And what the questions that we're really asking ourselves here is, well, what problem is that new technology solving? And then what's unique about that technology or that company perhaps that's entering the market? And the reason why we ask ourselves, especially that second question, is, well, what's unique about that particular technology, is that you often have incumbents, okay? And can they potentially innovate themselves and then just kind of now offer that product? And I might just walk through an example that to make kind of this really tangible. So buy now, pay later, I think something that the Aussie market knows incredibly well, with Afterpay starting here. So what was the customer problem that buy now, pay later was solving? It was enabling those that didn't necessarily have access to credit to make smaller purchases when they wanted. So it's something that is really useful. But then when you ask yourself that next question on what's unique about that technology, it's where it comes undone just a little bit, because they are offering credit. And now when you look to the marketplace, there's a lot of people offering credit. It's a really established market. So what was able to happen, now it took a few years for incumbents to do so, but your likes of Visa, MasterCard, Amex, PayPal, they all were able to develop a competing offering. And on top of that, you then had domestic players in Europe just set up buy now, pay later, starting in England or starting in Sweden, and then a US offering. So a lot of competition kind of entered the market here. And then what then becomes a challenge is when an incumbent can kind of replicate that offering, they already have the customers. So the cost of customer acquisition then becomes incredibly hard for your more siloed players. Whereas CommBank can lean on Visa and MasterCard, they now have Pay in 4 by just leveraging a technology that was reasonably easy to replicate. So kind of when we step back here, what are we doing? We're trying to understand an industry and that individual company of what is it that they're doing? Is it unique? Can they protect and grow earnings into the future? And that's really kind of the framework we're looking at. Well, could this trend be enduring or not?
Well, with those characteristics in mind, what companies tick a lot of those boxes in this megatrend?
Yeah, so Visa and MasterCard are really key in this.
I was actually just going to ask that. I feel like almost every conversation around disruption in fintech always comes back to, but we're still using Visa or MasterCard's payments rails.
Correct. And that's what's really incredible about these two businesses, when you look at them from perhaps 20 years ago, they were a consumer rail, right? And what they built is truly incredible. Like, if you've been invested in them, you've made on average 15% per year over that period, because they've grown their payments, their merchants, their cards around 10% per year over that period. And it's a very capital light business. So what they've been able to do is take their network, which has incredible quality attributes, which we can kind of touch on, and they're now leveraging it. So they're then supporting fintechs, they're supporting banks, they're supporting merchants to improve their offering, because payments really is central to all of those different businesses. So they are enabling kind of the gig economy to operate so smoothly. They are enabling those loyalty programs that I mentioned. They're enabling a reduction in fraud because of the strength of the data that they have, and it's unmatched. And that's because of the quality. One attribute of quality we haven't spoken about for other companies yet is network effects. So what's incredible for Visa and MasterCard is the strength of that network. So they connect to over 25,000 banks, to 4 billion cardholders, to 200 million merchants. Now, what a network effect is that every participant of that network benefits as the network grows. And because of that, it's almost impossible for anyone else to come in and create a network. And anyone that's trying has to spend a lot of money to try and acquire customers. And then when you think from the bank's perspective, well, why are they going to use another network when this network works better than everyone else's? Everyone uses it. My customer has a great experience. They can shop anywhere in the world, and they continue to innovate. I think it was the comments you made right at the beginning in terms of innovation. Most of that has been the networks in that constant innovation in how we interact with commerce, moving us from kind of cash to your click-clack to your tap and pay to digital wallets. None of that is possible without that kind of innovation behind Visa and MasterCard, and they can continue to deliver really strong earnings growth. They're backed by that tailwind, now by that next leg of tailwind in offering services, which is really attractive and sustainable growth, which is really important for investors.
Do you prefer one over the other?
When we do have a preference, it's based on valuation at any particular point in time. So they're very, very similar companies. Visa has higher penetration in the US, or higher share, in the US, whereas MasterCard has a higher share in Europe. So you can play different tilts on where you're seeing particular growth at any point in time. That's one of kind of the differences that you can often lean on.
Yeah, that's interesting.
Nice.
So we've covered a lot today.
Yes.
3 big themes, 5 companies, and you've mentioned a few others. So a lot of ground we've covered. Can you sort of bring it all together for us as investors? How should we be thinking about megatrends and investing in them? What do you want us to leave today with? 2
things to really remember here on megatrends. One is the importance of duration. So we typically will overestimate kind of a new kind of megatrend or trend at the beginning, and then underestimate the length of time that it takes and the benefit, the duration that you can get that benefit for. And that then really leads into the second part, which is that power of compounding. So if you have a company that can generate these above GDP returns for decades with conviction, plus a quality company, you're then creating this really nice compounding flywheel for 10 plus years, which then becomes really attractive for investors.
Nice. Well, with that in mind, to close out, how can we pull all of this together into a nice, cohesive investment strategy?
Well, let's just sum up the 17 years of Magellan. I think the really important thing for any investment strategy is to first set your objectives. So that's just really understanding how much risk are you willing to take on for the return that you're getting. And we're trying to weave that in along the way in the megatrends that we picked, in that you can pick a more defensive megatrend like your healthcare to invest behind if you don't want to take on as much risk and you want that greater certainty, or you can go more towards that semiconductor space, which is higher growth, potentially higher return, but then there is also more risk that you're taking on. So number one is just working out, well, where do you sit in that spectrum, and then you can kind of peel back then on, well, where would I like to allocate across those. And I think importantly, it's just what are the quality companies within a particular megatrend, and then you go down to that investment objective piece. And what we've done at Magellan now is we have 3 different strategies that have that range of risk tolerance. So they're all investing in that same quality universe, but it's how much risk do we want to be taking on to meet the client objectives that we've set out.
And so what are those 3 strategies?
Yes, so we have our Magellan Global Fund, which has been around for 17 years. That is your lower risk strategy. Recently, we've launched to market our Global Opportunities Fund. So that does have a 3-year track record. That has more market-like risk, but investing in those high-quality names. And then we have our high conviction strategy, which is taking those bigger bets, investing in kind of typically that 10 to 15 companies, but we're really targeting that higher growth company within that subset. So it's all actively managed based on that fundamental research, which couldn't thank our investment team more for, because they're looking at the companies, the industry trends, and understanding what makes these companies tick that will enable them to protect and grow earnings into the future. Just because a company did it in the past doesn't necessarily mean they can do it in the future. It's really asking the question of how did they do it in the past and how can they keep doing it in the future? And that's what we're spending all of our time doing.
Well, for more information on all of the funds, you can head to magellangroup.com.au. All the information is there for you to determine if the funds are right for you. But Elisa, thank you so much. 3 big trends to try and get our heads around, some of which I know are very, I guess, in demand or of interest to the Equity Mates community. So thank you for sharing your insights today. We really appreciate it.
Absolutely. Thanks for having me.
Thank you.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.